jump into this presentation, I would like to explain to you the nature of Genting Berhad. Basically, Genting Berhad owns businesses such as tourism, plantation, properties, energy and biotechnology, and last but not least, earns money by investing and managing in their own company.
Hi everyone! In this video, we are going to present about Genting Berhad. So, just a brief background. Genting Berhad was founded in 1965 and the company doesn't only operate in Malaysia. It actually has operations in the United Kingdom, Egypt, the United States, and even the Bahamas. The company focuses on a few major areas like leisure and hospitality, energy, plantations, property, and life science. But of course, the most well-known one is the hospitality segment, especially under the Resort World brand. Okay, so that's the basic background of Genting Berhad. Next, we move on to operating segment under MFRS 8. Alright, under MFRS 8, an operating segment is basically a component of the company that carries out business activities, meaning it earns revenue or incurs expense. And the important part here is that the segment performance is reviewed by the Chief Operating Decision Maker, or we call it as CODM, to make decisions on resource allocation and performance assessment. Another simple point, for each segment, there must be separate and clear financial information available. So in short, MFRS 8 helps us understand how management views and evaluates every different part of the business. Okay, now that we understand what an operating segment is, we move on to the CODM, the person who reviews and evaluates this segment. So, CODM or Chief Operating Decision Maker is basically a person or sometimes a group who makes key decisions about allocating resource and evaluating segment performance. And according to MFRS 8, the segment operating must reflect the internal information reviewed by the CODM. For Genting Berhad, the CODM rules are held by both the Chief Executive and the Board of Directors. So it is not just one person, it is shared responsibility. Alright, next, let's look at what each of them actually does. First, the Chief Executive is responsible for overseeing daily operation and making operation decisions, basically the day-to-day running of the company. Meanwhile, the Board of Directors look at things from a broader angle. They review the performance of Genting's major business segment like leisure and hospitality, plantation, and power. So, both parties work together. Chief Executive handles the operation. Board reviews segment performance and big picture decision. Okay, so now let's see who actually holds this position in Genting Berhad. Okay, this is Tan Sri Lim Kok Teh, the Chief Executive of Genting Berhad. This is Tan Sri Fong Cheng Yuan, representing the Board of Directors.
For question 3, there are two types of segmental report under MFRS 8, that is business segment and geographical segment. Under business segment, shows performance based on different industries such as leisure and hospitality, plantation, power, property, and oil and gas. Meanwhile, for the geographical segment, shows that financial information based on location such as Malaysia, Singapore, Asia Pacific, Bahamas, United Kingdom, and Egypt. Here is a snippet of geographical segment. Here is a snippet of business segment.
So now, we are talking about the benefit of segmental reporting. The first key benefit is simple. It helps us assess the performance of each individual business segments. It breaks down Genting diverse operation from its hotel to oil pump and power. So, we can see which one is making more money and which one is struggling. In 2024, the leisure and hospitality segment contribute 83% of the total revenue and a massive 84% of its adjusted earning before interest, tax, and amortization. This immediately highlights where the financial strength is coming from. Okay, here comes the interesting part. While Genting is a Malaysian company, their segment analysis shows that the Singapore operations are one of the single largest revenue generators, outperforming the Malaysian segment. The second benefit is crucial for management and investors. It improves decision making and resource allocation evaluations. The information in these segments reports is actually what Genting top executive use for their own strategic decisions. It also use adjusted earning before interest, tax and amortization as a key measures to assess segment performance. This operational focus allows us to judge how effectively the management is in running each businesses, excluding one-off events.
Next, what the meanings of MFRS 134? MFRS 134 have the specific meaning, which is interim period have the shorter time rather than full financial year. For interim financial report means financial report containing full set of the financial statement or condensed financial statement for the interim period. There are a few minimum components are needed in interim report. First, condensed statement of financial position. Second, condensed statement of profit or loss or other comprehensive income. Third, condensed statement of charge and equity. Fourth, condensed of statement cash flow. And lastly, selected explanatory notes. Interim financial report can be issued either bi-monthly, semi-annually or quarterly. Bursa Malaysia require all the entities who has the debt and equity security are publicly traded to publish interim financial report. To complete, MFRS 134 prescribe minimum context including disclosure, identify recognition, measurement principle that should be applied in interim financial report.
The first significant event is the issue of Islamic medium-term notes by Benih Restu Berhad on 28 April 2025 with a total value of 800 million ringgit. This consists of 300 million sukuk murabaha for 5 years at 3.88% profit and 500 million sukuk wakalah with 7 and 12-year tenures at 3.93% and 4.05% profit. Sukuk is an Islamic bond that pays profit instead of interest to comply with Sharia principles. This issue provides the company with additional funding to support business expansion and investments, but at the same time increases its debt obligation. Next, I will pass to the next presenter.
Okay Nishuna, thank you. Now, let's talk about second significant event. This event happened on 1st May 2025 when the Genting Empire Resort Limited bought the remaining 51 share of Genting Empire Resort Limited Liability Company and also known as GERL. To complete this purchase, the company paid USD 41 million and also took over USD 39.7 million loan. Because of this acquisition, Genting now fully owns GERL. This means the company can make all the decisions, make the daily operation and keep 100% of revenue and profit from the business. It also strengthened Genting's position in New York gaming market since they now have full control of the business in that area. Overall, this event support the company grow and improve its future earnings.
This is income statement. This is statement of comprehensive income. This is statement of financial position. This is statement of changes in equity for 2024. This is statement of changes in equity for 2025. This is statement of cash flow. And last but not least, this is notes to the interim of financial report.
Thank you.